Do you have non-deductible debt and want to convert it into a more tax-efficient structure? Debt recycling could be the answer. Debt recycling is a strategy that converts non-deductible debt, such as your owner-occupied home loan, into tax-deductible investment debt, potentially reducing tax and accelerating long-term wealth creation. Rather than simply saving cash, you pay down your home loan and then extract or redraw that equity to invest. Over time, your non-deductible home loan reduces while your tax-deductible investment debt increases. The borrowed funds must be used for income-producing assets like an investment property to make the interest tax-deductible. Lenders will need to assess your serviceability, and the loan needs to be structured to separate personal and investment debt. Risks exist. Market fluctuations and poor investments can impact returns. But for disciplined investors, debt recycling can help grow wealth faster than saving alone. Always speak with a mortgage broker and financial advisor to see if it's the right strategy for you.